Well, the big news in tech today comes from Apple, where investors attending the company's annual shareholder meeting voted to change the way members are voted onto the board. No longer will a plurality be enough. A majority vote will be required to elect board members. Joining us right now with more are Ashok Kumar. He's senior tech analyst at investment bank Rodman Renshaw. Also with us, Michael Sansoterra. He's co-manager of the Ridgewood Large Cap Growth Fund. Apple, by the way, is that fund's top holding, accounting for almost 6% of assets. So two gentlemen that are perfect to talk about this. Ashok, let's kick it off with you. In terms of what we got out of this meeting, what's the most significant thing that you think investors need to be aware of here?
Now, I think what the large institutions have tried to do is to bring best corporate governance practices to Apple. But that being said, the investors do not have anything to fret about. Over the last 5 years, the stock is up over 400% versus the broader market, which has been flat. And even over the last 12 months, the stock is up over 70%, significantly outperforming the benchmark. And Apple is by no measure a Hewlett-Packard or AMD. But that being said, I think this is a step in the right direction to improve transparency.
Michael, you agree with Ashok?
I do. A little bit more transparency can't hurt. It's not, to Ashok's point, we're not really that concerned. Frankly, the company's been very well managed and well governed. The board has done the right thing for the company and for shareholders thus far. We're pretty happy. We'll always take more transparency when we can get it, but everything seems to be going along pretty well at Apple. There's no reason to fret at this point.
Although, Michael, we were talking with a union leader earlier who was saying they want a succession plan. They don't necessarily want names, but they want to see that the company has everything in place. Isn't that something shareholders deserve to know?
I don't think it's really that critical. Apple has done a good job of having a pretty deep bench. Steve Jobs' health concerns notwithstanding, this is not a one-man company. If this was 1990 and it was from the brinks of bankruptcy, you might be able to make a little bit stronger argument. But the company's been well-run, well-managed. It's beyond a one-man show. It'd be, again, a nice to have for additional transparency, but by no means a must-have.
Ashok, you agree with that? Or, so many folks, when people talk about Apple, they say, it's Steve Jobs, and Steve Jobs is Apple. He is the visionary. And, yep, folks can come up with good ideas, but he's the one who really has the great ideas and pushes them to perfection and just gets it so right. I mean, can an Apple really survive without Steve Jobs? Maybe it can for a few years, God forbid, but can it really in the long run?
No, I do second Michael's in a position that Steve has assembled a broad and a deep talent bench at the company. But that being said, I think there's always the X factor, the halo factor, because Steve is unmatched in his ability to anticipate consumer demand, and he's a focus group of one. So I think that will be missed at Apple. So I think that's something investors will be concerned about going forward.
Hey, Michael, you guys own a lot of Apple, right? I think, what, 5% of your fund there or so? 6% of your fund?
That's about right. Correct.
What do you think is the key event going forward? I mean, consumers obviously are excited about maybe a new iPad or cheaper iPhones. What do you think is the most important event going forward for Apple?
Sure.
Product-wise.
At the Ridgewood Large Cap Growth Fund, we're really looking for companies that can beat expectations and then raise the forward expectations. And Apple's done a great job of doing that for, like you said, the last 4 years plus. What we look forward to is the existing product set, be it iPhones and iPads, expanding international markets, as well as those products actually getting new generations of new functionality, new gee whiz things to have. And that doesn't even really include the potential sort of X factor things that the company has been managing to come up with going forward. It could be a little bit more foray into the living room with Apple Television. There's actually a lot of things that Apple can continue to do that we think can make the revenue and earnings grow beyond current investor expectations. So they've got a lot of levers they can continue to pull that they've got sort of cooking now. I think that this is a better company than most for coming up with new products in the future that you and I can't really even foresee. That should allow them to beat revenue, beat earnings, and outperform as a stock.
I mean, Ashok, is there anything that Apple isn't doing at this point that you'd like them to see, like them to be doing?
Just following up on Michael's commentary, there are very few companies of this size. I mean, this year, fiscal 11, I think street estimates call for 50% top-line growth with revenues approaching $100 billion. There are very few companies, if any, that are growing organically at that rate. And if you look at valuations, about $25 in earnings power for this fiscal year, 30 for next year, the valuations are extremely compelling. So I think from absolute metrics, and as Michael indicated in terms of the product pipeline, the company is unmatched in the technology ecosystem.
What do you think, Michael, as far as management here? I mean, what to do with their cash, how to manage the money they have? Obviously, you're impressed with what they've done so far, but what do you want to see them doing going forward? Do they need to give some back, buy stock? Do you want to make acquisitions?
Sure. The more stock they give back to shareholders, the better. I'm always happy to have a share buyback, but I think they've been prudent in storing the cash, making small acquisitions, tuck-in and technology-based acquisitions. To Ashok's point, this is not a company that's grown by acquisition. It's really been organic, and that's key. So they need to be smart about their cash. They need to hoard it a little bit, and I suspect at some point as we get further down the road, we'll see buybacks, and we may see. Hopefully, we won't see any large acquisitions, but they've really never telegraphed that they would do that. So far, the use of cash has been solid, and I think buying back more shares it's always welcome from our point of view.
Ashok and Michael, guys, thank you so much for talking about Apple this afternoon. We appreciate it.
Thank you, guys. Appreciate it.